Welcome to Markets Now. I'm Michelle Rick along with Vince Boddicker with Farmers Trading Company. We've got livestock lower, but grain sharply higher this morning. And Vince, let's jump right in talking about the fact that we're putting in both war and weather premium into these grains, aren't we?
We are, as you and I noted, I think it's maybe more weather than it is war, but they're all a factor in there. Um, Whether we're going to get grain out of there, there's still plenty of grain in the rest of the world, I think. But it's amazing in the last 5 days how you can change people's attitudes from being bearish that we're just going to keep going lower. We're got a big crop, and then all of a sudden, late last week again, you start saying, well, there's some of those dry areas that still aren't getting rain, so it all becomes a concern all at the same time, which is, I guess, great if you want prices to go higher.
Yeah, and the extended forecast looks pretty hot and dry, so that seems to be fueling the beans.
Yeah,
Technically, corn market, we got above some pretty key resistance in that 50% retracement level here this morning, didn't we?
we did, and I think that was good. You got halfway between 50 and 62, and now you have to see, can we keep pushing? And even if we sell off some today, you still look at it. How many days do you think you can go 30 cents higher and continue to do it? It's not like you're seeing things burn up in most of the corn belt. Some part of it's that way, but most of it is still fairly green. But it wouldn't take long to change that if we get in the mid 90s and some good winds.
Yeah. Do you think the funds are covering their shorts in the corn right now? Is that kind of the immediate push here too?
You got to wonder if it's not part of it. When we looked at that commitment to traders report last Friday, you'd saw where they had added more shorts. We realized that's only through last Tuesday, and then we started to rally, but they were 62 or 63,000 contracts short. And when things turn like this, you got to think they're heading for the doors and help fuel it. And the other side of it could be farmers when you get back east that have made some sales earlier in the year and they're in those areas where it's still dry and wondering what they're going to get. They may be covering some of those positions also.
Gotcha. November beans also getting above the $14 level there. How much more weather premium do we need to put into that market, do you think?
I don't know. That's a good question. 14, 30, 35 ish. I think there's some resistance areas there, if I remember right. When we go, let's just take ourselves back to that June 30th report. Myself, I was disappointed that you couldn't keep running. And I thought when you couldn't keep running after that, maybe you're not going to do a lot in here above that 14 to 1430 area. Not that we can if we get the right weather. But I think we also have to keep in mind whether we're looking at the corn market or the bean market. We have a huge Brazilian crop of both, which probably has plenty to supply China on pretty much all of their needs for this next year. And they have somewhere around 50% of that crop or so they can't hold. That's got to come in the market immediately.
Absolutely. Wheat market, obviously, we talked off the top, a war premium there. We have Russia attacking the Odessa port. Those attacks have kind of escalated here. Do we need to put more war premium into this market or not, do you think?
We haven't seen huge demand, I don't think, previous to this, and we've been somewhat outpriced in the market. I think we were getting closer when we were down there to being competitive, and you just have to be careful so we don't get ourselves priced out of that market again. But yeah, having some in there, I think, is okay. But again, we can speculate. We realize this is the futures market. They're anticipating what may happen. So let's, again, we've got some of that in. Now we're really going to see, can it happen or does it happen?
Yeah, and we're kind of running up into some chart resistance here now in wheat that we're going to have to take out, aren't we?
We do. I think that 855 to 860 level in Kansas City, September, I think is key. We're still in an uptrend, but if we can't get through those numbers, then we're going to come back. Are we going to get in the sideways mode because we didn't put new highs in? But could we head for the $9 mark? They sure could if we've got the right news.
Yeah, no doubt. We've been really range bound there. That's for sure. Outside markets, we should also talk about that because strength in the equities sector, crude oil has certainly been spilling over into the commodities sector too, hasn't it? Or the ag commodities.
It doesn't hurt us in here. You've got a better attitude and less talk of recession. So if you do that, then people are going to look at it. Well, maybe people won't back off on what they would have otherwise, and that all keeps a better demand for commodities.
And the cattle market is certainly seeing some pressure this morning with the higher corn. That's certainly understandable. But boy, that market has been very strong here in terms of where cash trade has been, especially in light of the fact that box beef has taken its seasonal break here.
Yes, and I think it's indicative of the tightness that we have, and you're in that mode where the Packers giving up some of the profit. He's still fairly profitable, I think, on where he's at compared to where he could be and where he was at the last time we were at these levels and not even this high in 2014. So I think it helps the situation, but consumer demand stays there, and that's still king of where we can go.
So there's talk of packer kill cuts. So is that a negative for the market, or does that just mean, Vince, that the cattle aren't there?
I think you take it as a neutral more than anything. Packer is probably looking at it that the cattle are tight, especially in the north. He wants to shore up the box beef price to increase his profits, but again, if there was lots of cattle out there that you're not going to be killing, I think it's a negative. But I don't think you're in that situation.
Yeah, I gotcha. What about the hog market? Seeing maybe a little pressure from the feed grain and the soybean meal sector here today, but also maybe some consolidation there. I mean, boy, we've had such a big run pushed by the cash market, but is cash starting or is it close to cooling? Because so far it's sustained a pretty good rally there too.
It has, and I think you have to be impressed at what the belly and the ham market has done over these last 2 weeks. It's really what's ran the hogs up, or 3 weeks. That's what brought us down all spring, and you're finally getting that demand to pick up and move that product. And that hog market in August, especially, it looks much like a Kansas City September wheat chart. You're sideways. You really need to break out, whether that's to the upside or the downside. I think you got a $5 or $6 move. I just don't know which way it's going to do it. I would tend to believe being overbought, it could be to the downside. But if we get the right demand, you're there. And I think the other thing holding it back is when you lost July, you were a $6 to $7 discount,
Yeah.
but you're not August yet, so it doesn't have to be in line.
Yeah, I was gonna say we have a pretty good discount going on there, which widened out at one point yesterday. All right. Thanks for joining us, Vince Boddicker with Farmers Trading Company. That is Markets Now.